Hey guys, good afternoon and welcome to another video. So today we're going to discuss support and resistance levels and how they are drawn in charts, because support and resistance are the most important indicator used in trading, and one of the most secure indicators, by the way. So the most people you'll see trading, they will always use or keep in mind that there are support and resistance levels, so what to trade and what not to trade. So starting off, I have a PowerPoint created for you guys, which we will begin with. So what is support and resistance? Well, support and resistance represents key junctures where the forces of supply and demand meet. In the financial markets, prices are driven by excessive supply, like going down, or excessive demand, going up. So supply is synonymous with bearish, bears, and selling. Demand is synonymous with bullish, bulls, and buying. These terms are used interchangeably throughout this and other articles. As demand increases, prices advance, and as supply increases, prices decline. When supply and demand are equal, prices move sideways as bull and bear slug it out of control. So our first slide is, what is support? So support is the level at which demand is thought to be strong enough to prevent the price from declining further. The logistic dictates that as the price declines towards support and gets cheaper, buyers become more inclined to buy and sellers become less inclined to sell. By the time the price reaches the support level, it is believed that demand will overcome supply and prevent the price from falling below support. So support does not always hold and break below support signals that the bears have won out of the bulls. A decline below support indicates a new willingness to sell and or lack of incentive to buy. So support breaks and new lows signal that sellers have reduced their expectations and are willing sell at even lower prices. In addition, buyers could not be coerced into buying until prices decline below support or below the previous low. Once support is broken, another support level will have to be established at a lower level. So this, you can see it going down over here, but it covered up real quickly and went up again. So this is actually a support level which has been tested a couple of times, like let's say 1, 2, 3, 4, 5, and arguably 6. So the price bumped up 6 times from this level. So this is clearly a major support level. So support levels are usually below the current price, but it's not uncommon for a security to trade at or near the support. Technical analysis is not an exact science, and it's sometimes difficult to set exact support levels. In addition, price movements can be volatile and dip below support briefly. For example here. Sometimes it does not seem logical to consider a support level broken if the price closes 1/8 below the established support level. For this reason, some traders and investors establish support zones. So we will come up with that later. So I said that there is a major support line over here, but you also have minor support lines. You see them over here. Minor support lines are mostly like they're often created where a certain price finds temporary security, and this can be tested by hitting that level like twice. Like for example, here it hit it once and twice, 3 times actually. So this is a minor support line here, and over here we also have a minor support line. So try to go down. It recovered and went down again, and it recovered, and then eventually it went down. So there's a small support line here for the low day traders and whatever. This is a great support line to trade with. And this is probably not a great minor support line, but I just put it in because you see that it found resistance here and it found support here. So this is a good example to see to explain about the minor support lines. And also in our live webinars when we trade, we explain more about this and we actually show how it works in the process. So that's for live webinars. So what is resistance? Well, resistance is the price level at which selling is thought to be strong enough to prevent the price from rising further, like over here. The logic dictates that as the price advances towards resistance, sellers become more inclined to sell and buyers become less inclined to buy. By the time the price reaches the resistance level, it is believed that supply will overcome demand and prevent the price from rising above resistance. So resistance does not always hold and break above resistance signals that the bulls have won out over the bears. A break above resistance shows a new willingness to buy and or a lack of incentive to sell. So resistance breaks and new highs indicate buyers have increased their expectations and are willing to buy at even higher prices. In addition, sellers could not be coerced into selling until the price rose above resistance or above the previous high. Once resistance is broken, another resistance will have to be established at a higher level. So you see a small outbreak over here, but it recovered, so no need to create a new resistance line over here, but it's something that you can, if this happens to you, you can like keep an eye on that, because if it happens like 2 or 3 times more in the same area, that means that there is willingness to break out of this resistance line. So where is resistance established? Resistance levels are usually above the current price, but it's not uncommon for a security to trade or at or near resistance. In addition, a price movement can be volatile and rise above resistance briefly. Sometimes it does not seem logical to consider a resistance level broken if the price closes 1/8 above the established resistance level. For this reason, some traders and investors establish resistance zones. So the resistance zones will be shown later. And also for the resistance, we have minor resistance. Look at this. 2 times. It hit it 2 times. Minor resistance. So for the day traders and the hour traders and whatsoever, this is great to see that in this area because now in a month, so in July it stayed near this minor resistance line. So this period, in the period of July, it didn't go above this support line, resistance line. Then again, in the beginning of August, it did, but for this month, there was a clear minor resistance line which you could have traded in. It hit it like 2 times already here. So that means that you can go with it. And also for here, this is a minor resistance line. I've chosen this resistance line because there was a good outbreak over here, which mostly can indicate that there is something going on, and you have to keep this area in mind and check it out. Also here, minor resistance lines hit it arguably twice, and you know, if this happened, the next candle would have also had the possibility to go up to the minor resistance line, but it didn't. It went down from that side, from that way. So it's a minor resistance line, but like for the future, it didn't really work out that much. So like I said, when it hit it twice, you can see it as a minor resistance line, but if it hits it more times, also with the support level, like if it hits more than 3 times, you can clearly indicate that that's a major resistance line. Like over here, this is a major resistance line, and this is a major support line. It hit 1, 2, 3, 4, well, arguably 5, but let's say 5 over here. Let's say 5, 6 times approximately. This is a real major support line. You see that when it breaks down of it, it recovers, and you see this recovery is so beautiful. So the next slide is methods to establish the support and resistance. So support and resistance are actually like mirror images, and have many common characteristics. So you have highs and lows. Support can be established with the previous reaction below, reaction lows, and resistance can be established by using the previous reaction highs. So you see that where it was a support line, it became a resistance line. This is very common, and you will see this more when you enter trading, that eventually it mirrors, like where it was support, it became resistance. So this is very normal, and like I said, when you get more into trading, you will see happening more. So in this chart, it shows a large trading range between December and between March. So over here, you see that there was a large trading range between these months, and support was actually established over here in October with the low around 31. 31 approximately, yeah, 31. And in December, the stock returned to support in the mid-30s and formed a low around 33 over here. So finally in February, the stock again returned to the support scene and formed a low around 32 and 31. You see that over here. So after each bounce off support, the stock traded all the way up to resistance. So resistance was first established by the September support break at 42.5, as you can see over here. And after a support level is broken, it can turn into a resistance level, like I just explained that to you. And from the October lows, the stock advanced to the new support turned resistance level around 42.5. So you can see that right over here. So when the stock advanced and the new support turned resistance level around 42.5, so when the stock failed to advance past these 42.5 over here, you can clearly see that a new resistance level was confirmed. The stock subsequently traded up to 42.5 for 2 more times after that, and it actually failed to support the resistance both times. So support equals resistance. So another principle of technical analysis stipulates that support can turn into resistance and vice versa. Where it was resistance, it turned into support, and that is actually a clear example of that. The break of support signals that the forces of supply have overcome the forces of demand. Therefore, if the price returns to this level, there is likely to be an increase in supply and hence resistance. The other turn of the coin is resistance turning into support. As the price advances above resistance, over here, the signals changes in supply and demand. The breakout above resistance proves that the forces of demand have overwhelmed the forces of supply. If the price returns to this level, there is likely to be an increase in demand and support. Well, in this example, actually, you can see that the stock broke resistance at 935 over here, and it actually in May, let's see here, yeah, so and it traded just above the resistance level for over a month. You see that over here, over a month it traded above the resistance level. So the ability to remain above the resistance established 935 as a new support line, a support level. The stock subsequently rose to 1150, like over here, but then fell back to test. I'm sorry, it went up to 1150 right here, but then it went back to 935 to the support, and it tested the support, and the support was still here because it recovered. And you see it testing the support like 2 or 3 times more, so that's clearly that this is a support level. And after the second test of support at 935 right here, the support level is established 100%. So next slide over here. This is a clear example of support turning into resistance and then back into support. So from this example, we can see that happening, and we can see how it had support over here, how it turned in resistance over here, and then it found a support line right here. But then again, this could be a minor support line because it broke that line. Now this is clear because it hit it 3 times, but the 3rd time it collapsed, so it went down. So the support line, the first support line became a resistance line, and after this line became the new support line, and then when this happened, like in April, it became another resistance line. You see that it happens a lot of times that the support level becomes resistance. And it actually means that the bears have overpowered the bulls. So when the stock rebounded at this right here, there was still an overhead supply at 18, and resistance was met from June to October. right here, June till October. So if we see that how the support was created right here, we can see that it hit it twice before it went down. So this is probably a good support level, but then again, this happened. So to identify yourself from a strong support level, it is very good for you to test it quite some times and just be patient, because that's actually something that I really want to tell you all. Trades do not occur every hour. A good trade occurs once a day. So you have to be patient, and if you don't have the time, if you have work, if you have school, if you have anything, there are people doing it for you, analyzing it for you, and creating signals, like also for our service, TradewithBen, at our website, www.tradewithben.com, because it takes a lot of time to analyze. Trades just don't occur every couple of every period, you know. So you say, where does this overhead supply come from? Demand was obviously increasing around 18 from October 98, so around here, and to March 99, so over here. Therefore, there was a lot of bullish buyers of the stock around 18. When the price declined below 18, so below this over here, and fell around 14, I could say probably over here, many of these, which were very unhappy, of course, bulls were probably still holding the stock. This left a supply overhang, commonly known as resistance, of course, around 18, so around here. So when the stock rebounded to 18, many of the green oval bulls probably took the opportunity to sell and escape with little and no loss. And when this supply was exhausted, the demand was able to overpower supply and advance above resistance at 18 over here. So it's kind of difficult, but if you just re-listen what I just said, this is something you need to know and identify in live trading charts when you trade. So for our next slide, trading range. So trading ranges can play an important role in determining support and resistance as turning points or as continuation patterns. A trading range is a period of time when prices move within a relatively tight range. This signals that the forces of supply and demand are evenly balanced when the price breaks out of the trading range, above or below. It signals that a winner has emerged. A break above is a victory for the bulls, for the demand, and the break below is a victory for the bears, the supply. So this is a good example actually to see, because after an extended advance from 27 to 64 over here, it entered into a trading range between 55 and 63. So this is the trading range over here for about 5 months. See that? 5 months over here. So there was a false breakout in mid-June over here. I'm sorry, over here, and when the stock briefly poked its head above 62. So this did not last long, and the gap down few days nullified the breakout over here. You can see that, the black arrow. The stock then proceeded to break support at 55 in August 99. So it broke the support over here and trade as low as 50. So it actually went to 50 from 64. That's a big price change. And yeah, and trade as low as 50. Here's another example of support turned into resistance. So this is support which turned into resistance, and as the stock bounced off 55 2 more times before heading lower. While this does not always happen, a return to the new resistance level offers a second chance for longs to get out and shorts to enter the fray. So breakdowns and breakouts. So we've all seen charts of stocks that traded in a range for a time and then bust through resistance to shoot effortlessly higher. Why does this happen, you think? Well, recall that the more times a stock hits support or resistance level, the stronger that level apparently comes. So being astute traders, we just know that a stock price is unlikely to precede a strong resistance level. The more of us that recognize that fact, the more short sellers there are likely to be lining up to short the stock. And the more short sellers there are, the more buy stops there will be set at unlikely level. But let's say the stock received a strong recommendation from the analysis to feel like this stock is a strong buy. The result, demand for the stock goes up. So short sellers are squeezed out as they are stopped out of and forced to buy the stock to cover up their short positions, creating what we affectionately term a short squeeze. Actually, everyone who thought that they knew where the ceiling or resistance was no longer holds a position in that stock, while what once was the ceiling becomes now the new floor or support level. So once a stock breaks out above strong resistance, it takes some time to create and recognize the new ceiling. So short sellers become less likely to step in because they can no longer anticipate where the stock is likely to bounce back down. So yeah, so this is talking about the breakouts, and the breakdowns is just as support can be considered the opposite of resistance. The phenomenon just described as a breakout can also occur to downsides. Over here you can see that happening here. And this is what we refer to as a breakdown. So the traders who own a stock long will often have stops set just before the below significant support levels. If these support levels are broken, traders will be stopped out if the stock falls below support. The increased ceiling volume will normally cause a quick and decisive drop in the stock because those buyers who knew the floor support level are now out of the stock, leaving very few buyers until the stock hits the next level of support. So now we're off to the support and resistance zones. Yes, so because technical analysis is not an exact science, like I said, it's useful to create support and resistance zones. This is a contrary to the strategy mapped out on our previous image, but it's sometimes the case. So each security has its own characteristics, and analysis should reflect the intricacies of the security. Sometimes exact support and resistance level are best, and sometimes zones work better. Generally, the tighter the range, the more exact the level. If the trading range spans less than 2 months and the price range is relatively tight, the more exact support and resistance levels are best suited. If a trading range spans many months and the price range is relatively large, then it's best to use support and resistance zones. These are only meant as general guidelines, and actually each trading range should be judged on its own merits. So returning to this image right here, we can see that November high over here had the trading range from 32 to 34, and it extended more than 20% past the October low. So making the range quite large relative to the price. Because the December support break forms our first resistance level, we are ready to set up resistance zone after the November high is formed. So probably it will be around December, as you can see over here. At this point though, we are still unsure if a large trading range will develop. The subsequent low in December, which was just higher than the October low, offers evidence that a trading range is forming and we are ready to set a support zone. As long as the stock trades within the boundaries set up by support and resistance zone, we will consider the trading range to be valid. So support may be looked upon as an opportunity to buy and resistance as an opportunity to sell. Like this is here. So you go down and it goes up right here again in this zone. So actually support and resistance is not always horizontal, but it can also be sideways. Like if you look at this, if you look at this level over here, there's a downtrend going on right here, and the downtrend always finds support on the green line. So actually it went past it, and then it recovered right above. You can see it clearly a couple of times. It doesn't go below that. So when you see a downtrend, try to draw a line and see if the line hits that support line a couple of times. When you see that it did hit it a couple of times, you can see that it's a reliable support line. But then again, the same goes for the resistance, because you see that the resistance has hit it around 1, 2, 3, 4 times over here. So you can clearly say that this is a clear resistance line. So it's good if you have a chart account like on TradingView or whatsoever to actually draw a line. There's nothing wrong with drawing these lines and just looking at it for the time being and see what happens. So there are a couple of things you need to remember. So there are two types of strength and resistance levels, which are horizontal and are sideways, like I actually showed you right here. These are the sideways and these are the horizontal levels. So the strength and resistance levels become stronger as they get tested more. Once again, let's take for example, you see that the support line has been tested 3 times over here, which makes it a very valid major support line for the rest of the chart. You see it, then it always hits it, but then it bounces back up again. Also for the resistance, it hits it after 3 times. You can clearly state that it's a reliable support or resistance line. Yes, so it takes 2 tops or bottoms to draw a strength and support line, because if it didn't hit it twice, you cannot even say that it's a support or resistance line. You just have to ignore what you've seen. Don't force it to fit. This is very important, because over here it didn't hit the resistance line. So don't tell yourself it went down here because it came near the resistance line. This is just something you have to ignore. Also for here, it didn't hit the support line. So try to ignore these things and don't force it. So basically, guys, this was our PowerPoint about support and resistance. If you would like, go to our website, and on our website you can apply for a 14-day free trial with classes with daily signals around 10 or 15 and live webinars in which you can copy our trade, mostly turbo trades of 60 seconds, as you can see over here. So just go to the 14-day free trial, just sign up with your first name, your last name, your email, and your phone. We'll get back at you within 60 minutes mostly. And if you already have a reliable broker, which you are very happy with, we also offer a 2-day trial of signals for 25 euros or dollars. Just join us if you think if you want to try us out. So thank you so much, guys. This was Ben from Trade with Ben. Please look at our other YouTube videos, leave a like if you like this video, and share it. You're always welcome to ask us any questions, and if you look at all our videos and you have any questions, just email us. You can do this on info@tradewithben.com, or go to the website at the contact page right over here. Contact us, leave us an email or text us or whatsoever, and we will get back at you as soon as possible, give you the answer. So join our trading webinars or our training webinars. So we have 2. We have trading webinars where we trade live, you can copy our trades in, and we have training webinars like these actually, where we explain the support and resistance. And look at our other videos about 60-second strategy, how to use martingale properly, covering up losses. And we hope you enjoyed this video. If you did, leave a like, leave a thumbs up. And yeah, so guys, see you next time. We have a live webinar starting in 20 minutes, so I have to hurry up. And thank you all so much for your interest, and hope to see you once again. This was Ben, TradewithBen. I'm saluting off, and goodbye, people.